Hi everyone, welcome back to Republic Labs. I'm David, and today I will be covering the latest headline of precious metals versus Bitcoin, at what price we can expect BTC to bottom, whether quantum risk has anything to do with the price action itself, and how other blockchains respond to the threat of quantum. Watch till the end so you don't miss out on any important highlights of the week. Let's go! James at Check on Chain analyzed the potential depth of the bear market flow from a market structure perspective, and then assigned probabilities based on 3 mean reversion models. And from his perspective, breaking below the true market mean at $81 feels relatively likely. $81K is like just above the supply air pocket. And so you can see it probably down towards the $70K, which is quite likely to be backfilled. You can see this from technical profiles and also on-chain profiles. And then there are similarities to May 2022, but there are also notable differences that are not as angry as the previous bear cycle. And James Check on Chain assesses the probabilities of getting to certain price levels across different time horizons. And for these, he used mean reversion z-score models and histogram charts for 3 things. First, for the long term is AVIV, and currently it's trading at all-time average for AVIV. And we can see if it goes down to -1 standard deviation, it's probably along the lines of $64K at BTC price, and then the -1.5 standard deviation is $53K. And then if we look medium term for Mayer multiple, it's currently at the -1 standard deviation. It's below the 200-day moving average, and if we see capitulation nearby the -1.5 standard deviation, that would be $70K. And then for the short term or near term, we can see from the short term holder MVRVZ score, which is currently below the mean. It's at -0.7 standard deviation, and if we see it to go down even further down below -1 standard deviation, that would make it into $81K, and previous capitulation is below -1.5 standard deviation, which is $73K. And so James Check on Chain summarizes all these odds trading below key price levels for each of his model, and in his view, for us to take a nasty force seller to drive down to $56K in the near term is possible, but the odds are between 5 and 15% based on long-term models. And so if the market gives Bitcoin near or below $70K, we can ramp up accumulation personally. Of course, NFA, do your own research, and at those prices, we're probably looking at 1 in 5 odds where past bears have bottomed out and considered to be deep value. There's a new on-chain trend emerging that has nothing to do with memes, and it's pretty much the only new sector growing exponentially in this market. So long as financial markets stay risk on, this should be one of the biggest ones yet. HIP3, launched late 2025, lets developers to stake 500K HYPE tokens to build perpetual markets for assets like metals and equities on Hyperliquid with no central approval needed. And so platforms like TradeXYZ is one of the builder, and HIP3 open interest reached an all-time high, driven recently by a surge in commodities trading. Just 3 days after HIP3 markets reached $1 billion in 24-hour volume, silver market on TradeXYZ alone is closing in on $1 billion today. So Hyperliquid is becoming the premier venue to trade perpetuals for all relevant financial assets much faster than anticipated. Explosive growth, and the total addressable market is every asset within traditional finance. And Jeff himself has tweeted side-by-side comparison of BTC perps on Binance, which is on the left, and Hyperliquid on the right. Audiobook is that you can tell they have achieved an important milestone of becoming the most liquid venue for crypto price discovery in the world. With Bitcoin showing relative weakness against gold and equities, a narrative has emerged that investors are front-running the existential risk posed by breakthroughs in quantum computing. Investment bank Jefferies made headlines announcing the reduction of its exposure to Bitcoin due to perceived quantum computing risk. However, while some investors may be reallocating, Charlie Spears would push back on the idea that this is currently a broad trend, and he believes that investors have started scoping the risk, but outside a few anecdotes and the Jeffries headline, he strongly doubts that this has had any effect on confidence in Bitcoin. His argument is that if investors were pricing quantum risk correctly, they would need deep technical understanding or have close communication with experts who do. And deep technical understanding would lead to accurate pricing of other technical risks in Bitcoin today. And those other technical risks are not priced in, and most investors are probably unaware of them. And so therefore, quantum risk is likely not accurately priced in either. And so quantum computing may come sooner rather than later. Many people are currently unsure on timeline, but many people have done a lot of work to understand the subject, and it's incredibly complicated. If they understand quantum computing risk, they would necessarily understand other less arcane risks to Bitcoin that are absolutely possible today, like poison block attack, time warp attack, 30% attack via selfish mining, duplicate transactions, compiler backdoors, and the list goes on. So we're approaching 20 years of Bitcoin, and in Satoshi's words, I'm sure that in 20 years there will either be very large transaction volume or no volume. And we are 17 years in, and fees are the lowest they have been. This concern is related to Bitcoin long-term network security budget. And so the sad, boring truth is that Bitcoin is down today because it's just not the trade right now. So as James Chekonjin says, attributing price being down to quantum computing risk as a primary factor is akin to blaming market manipulation for red candles and declining exchange balances for green ones. It's certain that as the quantum computing topic heats up, investors will react and de-risk. Alongside the concern of quantum threats in Bitcoin community, the Ethereum Foundation has laid out a roadmap and strategy to tackle this and future-proof the network. And after years of quiet research and development, the EF management has formed a new post-quantum team led by Thomas Corager, and they officially declared this as a top priority. And in 2026, they are accelerating research and development with routine devs calls and sessions, a $1 million initiative, multi-client consensus devnets, workshops, educational series via podcast, and proposed roadmap for the coming years. But the website is still upcoming, which is going to be pq.ethereum.org. So the superchain ecosystem also has announced their post-quantum roadmap as well. They're committed to stay aligned with Ethereum and putting a clear stake in the ground to be ready for a post-quantum world. So we can say that Ethereum is for quantum resistance. And as Vitalik wants Ethereum to pass the walkaway test, he has a wish list for future-proofing the network. Interestingly, some features are live on Monad already, and lots more work needed for full quantum resistance as seen with Bitcoin and Ethereum, but scalability for decentralized EVM L1 with many thousands of TPS is implemented directly on Monad. MonadDB is also the solution to state architecture that can last decades, and the bonus that would be hard for a system to stand the test of time without is subsequent finality, asynchronous execution, and faster message propagation with Raptorcast. And so these are all technical, but explains why Monad engineers chose to build an L1 with a long-term vision in mind, scaling Ethereum like Solana without sacrificing decentralization. And Monad has just turned 2 months old, and Wormhole scan shows that the number of cross-chain transfers, almost $77 million of volume, flows from various blockchains to Monad over the last 30 days. And this represents a 9% market share and places Monad in number 4 after Ethereum, Solana, and Arbitrum. And total deposits to Monad DeFi ecosystem is over $437 million, accounting for borrows, and stablecoins market cap is more than $415 million. Other notable statistics are 110 million transactions, $5.4 billion spot DEX volume, and $190K burned in gas fees. And so onwards and upwards for Monad. Thanks for watching, guys. If you like this video, please give it a thumbs up and subscribe to the channel, and I'll see you in the next one. Cheers.